It's Ken Kraetzer for CBSI Services. We're in Lake George, New York at the Executive Bank Symposium for the Independent Bankers Association of New York State. And we have a chance to talk with Randy Phillips, who is the Senior Vice President and Chief Risk Officer at 5 Star Bank. That's in Rochester. Randy, good to see you. What's it like to be at the event today?
Oh, it's a fabulous event. There's a nice turnout, and very happy to be here on behalf of 5 Star Bank, and just networking with my colleagues and hearing the interaction as to what's going on in the industry in terms of upstate New York. And it's a fantastic event. Couldn't appreciate it more than I do.
Very good. Now, tell us a little bit about your organization, 5 Star Bank.
So 5 Star Bank is about a $5.5 billion bank. It's headquartered in Warsaw, New York. We have operation centers in Rochester and Buffalo. We basically cover the western half of New York State, 81 West. We do also have an indirect portfolio, which covers upstate New York and Pennsylvania. We recently launched in 2022, early 2022, a loan production office for commercial real estate in Baltimore, Maryland.
Very good. Now, tell us, if you would, about some of the key banking services that you offer your customers.
Sure. So we are a commercial bank. We offer commercial lending in terms of C&I and commercial real estate. We have a real estate, consumer real estate, residential real estate division, which does loans and lines, as well as we have an indirect business which does indirect lending for auto portfolios, auto loans, and a direct loan portfolio as well.
Very good. And we've been talking with some of the bankers about how they got through the pandemic, serving their customers, working with their employees and their communities. How did you handle the pandemic? How did you adjust?
So during the pandemic, we obviously did PPP loans. We did 2020 vintage and 2021 vintage PPP loans. I want to say overall we did about $370 million in PPP loans. The exact number of them I don't know. I can tell you this, the 2020 vintage PPP loan size was larger. The 2021 vintage was smaller, but higher in number. To date, all of those loans have been forgiven. So $370 million, we've got about $4.5 million left to be forgiven on the balance sheet. That aided, several thousand small businesses in making it through the pandemic. In addition to that, on the consumer side, we delayed several loans. On the commercial side, we also delayed several loans in terms of principal and interest, which all amounted to helping our customers make it through the very difficult times of the pandemic.
Very good. And the role of community banks, taking care of communities. You see a lot of the banks from upstate New York, western New York, that are vital institutions in their communities. How do you see the role of community banks?
Well, as a 24-year veteran of J.P. Morgan Chase, who joined a community bank, I see the role of the community banks much more clear than I did in the beginning of my career. Community banks serve that niche of the market that is what I call the real market, right? And I tell my colleagues that are still at J.P. Morgan Chase, understand that the systems you work with, the education you get is extremely strong, but you're not dealing with the real banking world. When you leave J.P. Morgan Chase and you enter a community bank, your understanding of what the real banking world is going to be so much stronger. You're going to understand about the commercial real estate deals. You're going to understand about the small C&I deals, the small business deals, the consumer and residential lending that you never saw at J.P. Morgan Chase in upstate New York, but is prevalent and a robust market and a viable market in upstate New York for the banking industry.
Randy, if you would tell us a little bit more about your career. You had a strong tenure at Chase, bank I worked at early in my career. What have been some of the steps along the path?
Sure. So I joined J.P. Morgan Chase and right out of college, St. Bonaventure University, go Bonnies, in 1990. And I worked at J.P. Morgan Chase until 2017. 2014. I left J.P. Morgan Chase and I went to First Niagara. My goal was to go to a smaller bank. I was at First Niagara, who was subsequently acquired by KeyBank. I was right back at a big bank again. I was a relationship manager on the commercial lending side, commercial lending officer, underwriter, etc. throughout my career. Came to Five Star Bank to run their loan review department in 2017 and was named their chief risk officer in 2018, and I've been in that role ever since.
And talk with Randy Phillips of Five Star Bank. What's your thought? It's been a bit of a challenging economy this year. What's your thought on what you see happening the balance of the year going into 2023?
So through 2022 into 2023, I see continued softness in the commercial portfolio, in particular C&I. CRE in the upstate market in Rochester and Buffalo is holding its own. As I said, we started an LPO in Baltimore, which is going gangbusters. On the consumer side, the indirect portfolio, auto lending is softening a bit as interest rates rise, as is residential. I think the focus for the remainder of this year, like I said, I'm the chief risk officer. I'm focused on delinquency rates. I'm focused on what that looks like as we head into 2023. But overall, there's an emergence in the community banking sector in regard to Fintechs and in regard to the digital transformation of banking. And that's really hitting home in the community banking sector. So right now, either, in my humble opinion, either you are looking at Fintechs, you are looking at banking as a service, you are looking at various digital transformations within your bank, or you should be, or you're going to be in trouble going forward, because the traditional area of banking is going to be a difficult space to maintain as we go forward, as other banks that surround you embrace the digital footprint and move to a non-traditional banking method of operation, which will put you at a deficit compared to them, and perhaps a deficit that may be unable to overcome at some point.
Hey, just a final thought. You brought up Fintechs, which are making a big impact on the financial service industry by bringing in new technology. Why do you see Fintechs as being so valuable to the banking community?
Because you take the concept of geography and you throw it right out the window, right? When you're dealing with a Fintech, they're bringing, so one of the biggest things that banks need to understand, especially in the banking as a service space, when you're dealing with a Fintech, they're not your customer, you're their customer, right? Or they're not your vendor, you're their vendor. Let me rephrase that. They're not your vendor, you're their vendor. So what I'm getting at here is that it takes the concept of I do business in Western New York and it throws it out the window, right? They may have signed up companies for whatever their banking as a service product is, and I'm talking specifically for banking as a service. There's cannabis, there's other opportunities out there, and it takes the concept of Western New York and throws it out the window, because they may be in 5 states, 10 states, 50 states, right? And you as a community bank need to figure out how to service that Fintech and what they're doing in an appropriate way. That's compliance, BSA, AML, OFAC, risk. You need to figure that out really quickly, because they'll bring you the opportunities. It's up to you to capitalize on them.
Very good. Randy Phillips, Senior Vice President, Chief Risk Officer at Five Star Bank in Rochester. Good to meet you, and thanks for the talk tonight.
Thank you very much. Appreciate it. Great event, great venue. and hope to see many more banks out here in the future.
Absolutely. This is Ken Kraetzer for CBSI Services at Lake George, New York.